derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
All right, everyone. So welcome aboard. It is 7:47 a.m. Chicago time on Wednesday, the 22nd of October, 2025. This is episode number 2705. Thanks for joining me. Let's just jump right into the Convergent Trading pre-market summary sheet here to get an overall perspective on what the market's doing. Mild or mixed risk sentiment this morning. You could see that the S&P is pretty much unchanged. The NASDAQ, same thing. The Russell's coming off a little bit. The Dow is flat. We have some lightness in the European markets on earnings, although Great Britain got some really good inflation numbers. It was expected to report year on year of 4%, came in at 3.8%. And so that's we're seeing a reaction there in the gilt. Other than that, typical news. We've got the Fed still in the blackout period. We have the government shutdown continues, 21 days now, pretty awesome. And also gold yesterday, and I posted about this in the Convergent Trading Discord. This morning, gold came off about 8.6% yesterday, between yesterday and the high of the prior day. Pretty big drop, the biggest drop since about 2013, 12 years ago. Big reaction from gold. Gold comes back to the monthly VWAP, so it hasn't gone too far to the downside. It snapped back to its monthly VWAP. U.S. President Trump reiterated that the November 1st tariffs on China will be about 155%, and that meeting with Xi might not happen. India and U.S. are closing in on a trade deal that could cut current tariffs to between 15 and 16% from 50%. Japan's new PM Takahashi is reportedly preparing an economic stimulus package that is expected to exceed last year's 13.9 trillion yen. Netflix shares fell after Q3 miss. Hermes missed Q3 revenue. That's why the softness in Europe. Gold, OpenAI. OpenAI launches ChatGPT Atlas web browser to compete with Google Chrome. And then today we have crude oil inventories, 20-year bond auction, an interest rate decision from South Korea, and Fed's bar. As far as the S&P, pretty balanced in the overnight session. Not much to talk about there. 134,000 contracts. We're back into what we would call normal volume so far. We see crude popping higher by 2%. Given the structure that we left behind yesterday, that's not a surprise. Gold is soft again by $60, still trading above $4,000. And then we're seeing crypto come off as well. Silver holding steady. The inventory on the S&P is at 49% long. The range is very normal. The point of control or the mode of the range over 252 days during this portion of the session is about 20. We're at 24.75. So pretty lackluster open this morning is what's expected. Here's the overview of what we've got so far. S&P completely in line with yesterday. You could see that it's a pretty Gaussian profile on top of a relatively Gaussian profile yesterday. Same with the NASDAQ. Boom, boom. Crude had a really decent a really decent excess low and held steady. And then yesterday we saw that it struggled to retest or stay below the overnight low, and ended up pushing higher, leaving an excess high in its wake before it finished in the middle. So crude looked like it was starting to shove the other way, and it managed to do so in the Asian session. In the Asian session this morning by popping higher and holding above its VWAP and mid. Gold, pretty big move here. This is the one I posted in the Convergent chat room. This is the chart I posted. You can see gold pushed, pulled, ended up pushing again, breaking by a tick. And this is like, for those of you who know what a failed auction is, this is kind of a big picture, multi-day failed auction. It tried to push above those two tops of 4,400, was unable, and then sellers came right back in and zipped it right back down, almost $400, almost 10%. And then we bounced back up, and here we are coming off again. So it's gold's been relatively interesting here in the way it's been behaving. So something to watch. Gold to me is a tough-ish trade. It tends to really run things over. Looking at the relative delta, you can see gold is still holding red here on the delta. There's a little bit of buying by the very large lots, but for the most part, sellers are in control there. Not so in the S&P. The S&P's got a positive delta, decent participation from the very large lots for this period of the session. Large and small lots are buyers as well. Seeing the same in crude, although the very large lots in crude are going back to zero, kind of flattening their inventory as we go into the open here in 5 minutes. Pretty sideways action in crude so far, pretty sideways in the NASDAQ and the S&P. So the crude popped and has been just kind of sitting sideways. You could see here the participation was really good on the aggressor side, on the aggressors from the buy side in crude, and since then it held basically in this flag pattern. So as long as it stays above that 58, crude's expected to continue to hold up here or climb with some resistance on the way up. Gold, on the other hand, is relatively bearish today. I doubt anyone wants to step in front of this falling piano in gold. Let's look at the ES in a little bit more detail and come up with our plans. So I had this is an old red zone here. This red zone was from Friday's action, and it's for Monday for the accelerator program for folks. By the way, congrats to cohort 6 of the accelerator program, getting through that program with us. I'm very happy with that. So I outlined this being the closing swing range on Monday based on Friday's range, and you could see it tested it right before the open, before pushing away. This was the LIS zone for Monday. If we had opened here on Monday, hands off the mouse, if we had fallen, come back, and unable to regain the zone, then the buy card gets off the table, and we're aggressive sellers into the poor structure below. As long as it held above here, we wanted to get long. However, Monday, as a recap, Monday ended up having a gap and go situation. It basically opened, ticked down 2 ticks, and the buyers were in control on Monday. We ended up pushing and finishing the auction at the upper quartile of the range with the point of control and settlement on Monday. Yesterday, let me get rid of this red zone from Monday. Yesterday, just noise, lots and lots of noise yesterday. It did hold on to these prices. And remember, the price above us that we are interested in now that's remaining is 92 and a half. 67, 92 and a half is the SOC of the China news. The big sell-off. And so we've repaired the weak structure that we had. We've repaired that. And I think sometime last week, I don't remember, I think it might have been, I did a TraderBite every day last week, except Monday, I think. And I talked about, hey, this looks like it is likely to continue to repair the structure higher and back to the SOC. And that's basically where we got to yesterday. We were short from the SOC yesterday by about 3 points or something. We've come a long way, and we're holding steady into today's session. So we have the VWAP and the full session VWAP, full session mid, and the point of control on top of the same price. There's no price separation between those day-generated prices or DGPs and the current price action, which tells me that I need to keep my hand off the mouse on the open and find the victor in this battle. It is starting to form a downward channel. You could see here, consolidated, breakdown, up, down, up. And, you know, if it breaks higher, okay. If it breaks lower, we're likely to continue to hold this channel until we don't. Underneath here, there's relatively weak structure under yesterday's low, all the way down to where we left the gap. So this whole zone below 67.60 all the way down to 67.20. So 60 to 20 is an interesting area. Once we breach in, I'm going to be looking for a weak return into that range. And if we get a weak return into the range and a roll and a push lower, then we will start to be aggressive on the short side, targeting the gap close. There's a gap down here, right there. There's a gap. There's an actual untraded external gap in this area. This is what caused the gap and go. Here, it's 8 o'clock, so crude just opened, but that's what I'm looking for. What is going on here this morning? I'm looking for an open auction that consolidates, tests the prior settle in the RTH session, and then I'm looking for this thing to breach into 92.50 and then to start walking itself back up into the 6,800 and so on. Anybody's guess up here, to be honest with you. I'm not going to pretend to be able to handicap how this thing might respond. But if you look at this. This is all weak structure. Very poor structure there. And we've basically repaired it for the most part, except for the gap areas like I just spoke about. The secondary scenarios, we open, we squeeze higher, get to 92.50, and then we do a liquidity check. We do a lick check, fall back in, and we're back in a range, and we're holding on to this MCV POC before we get the prior settle, test down, and then just kind of wait it out and see what happens going forward. Tomorrow, there's quite a bit on deck. We have retail. We have existing home sales in the U.S. We have inflation out of Japan. Initial jobless claims, maybe. And then Friday, right now it's just we're supposed to get inflation on Friday, but it doesn't look so good. So the market may go into a holding pattern, having regained this upper distribution is what I'm suspecting. I mean, if you don't know what data the government has, then the course of action here is to just sit steady and wait. Okay, so that's where we are on that. Crude is a much easier read for me right now. Crude created this beautiful, remember last week, the inside day, the expectation was this is likely to be a base. We had a nice excess. This was likely to be a base, and then we expected crude to come right back into this zone right here, the 58.20 to 58.40, and it ended up breaking down, which actually was a surprise, breaking down, creating, putting in an excess low again, and then finally putting in a base and pushing higher. So this is right here, just a beautiful excess. You can see the nice taper on volume, and it just held steady, and it kept trying to test below and above, and it just held steady here. And so crude has a good base. It has formed a nice rounded bottom and is likely to pick up momentum to the upside. It's hit its first target. You could see the zone that I have here. It's hit that. Some pretty good collisions right there. So crude is likely to just chippity chop today. It's covered quite a bit already and is a little extended on its Vol Sigma levels. Okay? That's it. I'll leave you with that. I don't want to overstay my welcome here. Good luck. Hopefully you're finding these videos useful. Good luck, and I'll catch you on Friday. Don't forget to hit the like and the subscribe button. Take care.